All right, check, 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 check. Hopefully this one works better. All right. Not exactly sure what happened, but all right. Let's see if this works. Check, check, check. Sound check. Check, 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 check. Let me know if I've got sound, please. I usually don't have problems with sound. That was weird. That's the one thing I usually don't have problems with. Check, check, check. All right. Check, 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 check. Microphone checker, 1, 2, wrecker. Alright, I'm going to wait and see if I can get anybody to confirm sound. Wonder if I do this off my phone. Check, check, check. Check, check, check. I'll be right back. Hold on. Alright, I got sound. Alright, I'll start over. Thanks for joining me. My name is Darkpool Algo. This is a special Memorial Day weekend watch list review. Every week we put out a free weekly newsletter. We pick the top 5 stocks, we do a SPY review, and we go over what's our dark pool meter, which is market sentiment based on dark pool levels. If you find this content useful, make sure you hit the like button, subscribe, and turn on notifications for more up-to-date stock market content. I'm going to send out a tweet real quick letting people know that the old audio is fixed, and hopefully we can get a few more people in here. Fixed on stream. Please rejoin. Grab a link. Let's see. Grab the old link. And we'll start over again. You're joined. All right, I think we're back. All right, hopefully we've got some more people joining us right now. Let me know in the chat if you've got sound. I just checked on my phone and it seemed to be working great. Okay. So the top 5 list for this week, right? I need a new watch list. Let me just throw these up on the old scratch pad. We're looking at SCCO, A, B, and B, HFC, XPEL, BBY. All right, so SCCO. This is Southern Copper Corporation. And let's just see what the old RTY is doing. What's copper? CL? That's crude. What is copper? Not sure what copper is. I've never played copper. YG, maybe? That is. That's gold. HG. Let's see. No, it's something with a G. Copper futures, yay. All right, here we go. Looking at copper futures, right? Noise. All right, so looking at copper futures, we've got a little cup and handle forming. We previously hit it high. We reverted to the 34 EMA. We used that as support before we bounced off. We made this nice next move up. We're currently in a demand zone that is from essentially, we're smack dab in the middle of it. So a break of that demand zone coming in at 417. Look for the next move up. I'm just going to throw the old demand zone, or excuse me, we're in a previous demand zone that is currently a supply zone, right? This is the supply zone. A break of that, we've got the next move up. Looking at, from a fib perspective, come on. Looking for any sort of symmetry that we can get going on here. Come on. Right. This 478, pretty significant symmetry level, followed by this 466. I'm just going to zoom in on that. Right. So, like I said, a break of this $4.71. We got the next move up for a 60-cent move, but in futures, that's a big move. What I'm trying to say is that from an index perspective, nice strong uptrend. We just tested support. We had a massive move up. Look for a potential retrace to confirm support before the next move up. So 1, 2, 3 pattern, right? The copper respects the 50. We didn't even come anywhere near close to it. It also respects the 34. So look for this copper, metals to move in the next couple of weeks, right? We've got more room to the upside than we do to the downside. We've got grade ADX within 8% of the 52-week high, ish on the old VWAP, right? All right. So copper is going to move, and with that, we're looking for a leader in that industry that's got the most upward potential. What I'd gone into before was the angle of movement. It's not I don't know if there's a technical analysis term for that, but for me, it's just common sense, right? If I'm choosing a strike selection based on expiration, so this, maybe we can't see this, but here's the expiration that we're going after, which is the June 18th, right? Let's move it back over. So this is our expiration. This is our fib retracement. So 75 is the 618. Based on what happens here, it's the 382. So if it comes up and hits this 382 and rejects, then we know that the momentum and the trend has shifted. But currently we're still in an uptrend. So this is just a normal retracement based on a previous fade. And that can be seen here. Let me just grab fib. Is it this one? Let's see, we would need to go from just grab some fib levels. All right. Just seeing if there's any other patterns I might need to be a little wary of. This could be, maybe a little inverted head and shoulders. Very tiny. So the sector is strong. We've got a nice uptrend, healthy pullback. We came in, we found support, previous demand zone, which is this one all the way back over here. This little guy right here. Let's see if I can find it, the specific one. All right, so we've got support coming in from here. we're going to have we had resistance coming in right here. So we came down, we filled up on the demand zone. Now we're coming back up to distribute those out of supply zone, right? If you're in chat, let me know. You shouldn't have any audio issues. So looking at strikes, monthly expiration, since that's all it offers, the 75 has got a ton of call open interest, right? But not a lot of volume. These 80s, high open interest, high volume, right? Definitely well within the risk tolerance. We've got a almost an $8 expected move, right? This week's market maker move is about $6. Currently trading at 69. Well, we're currently trading at 70. So 75s are well within reach. The 80s would, maybe be a little bit cheaper. From a technical standpoint, looking at SCCO on the 4-hour chart or the 15-minute chart, we have this nice sloping recovery reversal pattern. Stack positive EMAs. 15, 20, 30, 60-minute squeezes are all about to fire off. We're kind of neutral in our market extension, so it's neither bullish nor bearish. However, I'm leaning more bullish on this based on our MACD is positive and increasing, right? The signal line just crossed above this compressing Bollinger Band. So this is all consolidation and squeeze, right? We've got this nice long drawn out bull flag, this consolidating bull flag that we just broke out of. That's not gonna let me. So, right, this one here. Right, nice long bull flag. When that breaks, we're gonna run up and immediately start running into previous resistance or Fibonacci levels. Typically, I try to get the fibs to line up as close to previous resistance as possible. And sometimes, what do I mean by squeeze ready to fire? Okay. So, let me, hold on one second, I'll answer your question. Let me just adjust these fib levels. That one touched pretty good. So, the thought behind Fibonacci is you go from previous high to previous low, and while that works for the majority of the time, I try to sometimes candle wicks will throw everything off, so I may just adjust these fib levels to where price action actually found support and resistance. It looks like the 618 resistance there. Might just need to move it down just a titch, just a little bit. Yeah, I want to go from there to there. What that does is it gives me a pretty defined level, because when I do my targets, I try to get right on the Fibonacci level. Okay, so by the squeeze being ready to fire. So this upper left area here, I'll just draw it. See if I can draw a rectangle around it. This upper left area here, these labels that you see, these are all based on John Carter's TTM Squeeze Pro. This is a multi-time frame Squeeze Pro. So each one of these labels on the left is whether the squeeze, which means that the Keltner channels have come with inside the Bollinger Bands, and anytime that happens, it puts extreme pressure from both the upside and the downside on price action. And when that squeeze releases, based on the histogram color and a couple of other factors, moving averages, trend, then the squeeze will release in one direction or other. Now the squeeze is great because market makers cannot they can't anticipate it. They can't value the squeeze release, right? Market makers can take data from millions of other sources and come up with this expected move rate, but they can't factor in the squeeze because there's no way to quantify how far the squeeze is going to cause the stock to move one way or the other. So it's an unknown, and since we're able to play within that unknown, that gives us an advantage. The squeeze gives us a greater than expected move, which is the expected move is what the market maker labels. So this $6 expected move, right? We could have a 4-hour squeeze fire off that launches the stock. Let me see if I've got a histogram that I can reference. Okay, so in this chart here that you see, the squeeze is this top lower indicator with the light blue, blue, yellow, and red histogram. This is probably not the best one to use as an example for what happens when a squeeze fires off. Let me just... Alright, so we're looking at the Tesla daily chart, and I'm trying to find a moment in time when that squeeze released and you can see the move. Okay. It's Saturday, or it's Monday. The market's not open. I got a few minutes so I can go over this with you. Okay, so let me just label where. So we're going to look at Tesla from, let's see, from this moment in time to this moment in time. Actually, I should go back a little bit. Alright, so these are the two moments in time that we're going to look at Tesla on. Let's see if I can get this a little larger for everybody interested. All right, so I've tried to make these little dots and the histogram large enough that everybody can see on the stream. Don't think there's anything else I can do. Okay, so what we're looking at here is this histogram down here and our Squeeze Pro labels here. So Tesla back on September, right? Back in September, entered into a squeeze, and I don't know if I've got a chart that I can show you what the squeeze looks like. Yeah, this would be the closest one. So this is, let me just clear out some of the stuff real quick. Good question. Let me just take a second to go through this. We wanted to look at September to November. All right, let's just get these all set up for you real quick. 9:14. All right, so here we go. $9:14 to 11:20. Okay, so in this chart that you see here, this solid gray line is the Bollinger Band. This cloud that you see, this little black cloud, is the Keltner channel, right? One second. So what happens when the Bollinger Bands, which are these bands here, these gray lines, when they get inside of the Keltner channels, this is a good example, then it starts to squeeze price action, right? No, you're fine, Gary. We've got some time. The market's not open. I would rather educate, take a minute to educate, and then we can go through technical setups. So whenever the Bollinger Bands get inside the Keltner channels and the stock begins to consolidate and squeeze, what we're looking for is for this to happen in this area here. So from this purple line to this purple line, the squeeze pro histogram and the dots are indicating that Tesla started into a, and then based upon the color of the dots, it can be a low, mid, or high compression squeeze. I believe my gray dots are low compression squeeze. So a low compression squeeze started off, which meant that the Bollinger Bands came inside the Keltner channels, beginning at this point, and price action will move up and down within those two studies, causing the histogram to rise and fall and rise and fall. So from the low compression squeeze, we started getting into a higher compression squeeze, which means that the Bollinger Bands started getting even tighter, and those are indicated by these red dots. At this period here, right, we had a little bit of a release from the Bollinger Bands, and that fired off to the upside. It was a nice 60, it was a $30 move in a day, right? The market makers can't judge that. They can't account for it because they don't know how far price is going to go based, or how long the squeeze is going to release for. Typical rule of thumb, when a squeeze releases, it's going to release for at least 6 to 8 periods based on the time period of the squeeze firing. For example, if it's a daily squeeze that fires off, you can look for about 6 periods of that squeeze releasing before it's ran out. So continuing on with this lower histogram, we're compressing just between low to medium on this point. At this point here on October, we had a little bit of a release, which means the squeeze fired off, and since all of the moving averages, the histograms are all negative, we had a lot of downward pressure. The squeeze fired to the downside. So continuing on, the squeeze is compressing, and then at this point here, that's not going to show up. We went from mid compression squeeze fired off into a lower compression squeeze. Our moving averages were stacked at that time. We had a lot of positive upward momentum. MACD was positive and increasing. When this squeeze released here on 11/18, as indicated by this from red to gray, which means medium fired, so now it's a low compression squeeze, right? The low compression squeeze fired off as well, and that price movement from this level when the squeeze started, let's see, how do I want to do this? So the squeeze started here, and that squeeze actually ended in this box, right? And that's signified by this squeeze firing here and ending here. So this squeeze fired, which means that the Bollinger Bands went back outside of the Keltner channels. Right, at that time, the histogram went from red to gray, and then from gray to green, which means that squeeze is fired and released. So we can count approximately 6 to 8 periods, or 8 to 10 periods based on the squeeze. So it's there's not an exact science with it. That's why the market makers can't quantify it. So so there's 3, 4, 5, 6, 7, 8, 9, 10, 11. This squeeze, the daily squeeze releasing lasted 21 periods before it entered into another squeeze. Leading up into that, I believe we've got at least 21 periods, right? This was a long-term squeeze, but the move from that squeeze was approximately, let's try this again. That was a 68% move, or $282 over 33 days. So that's the squeeze, and that's a kind of a little bit deeper explanation of the squeeze and why the squeeze is important, because it does indicate a higher probability of making a larger than expected move in a moment in time. Market makers can't account for it, therefore they can't manipulate the premium, and most of the explosive moves happen when a squeeze is released. So that's the squeeze in a nutshell, right? So that would be this giant move here. So the squeeze released. The histogram went from green to mid or low compression, so that whitish color, and it compressed again for a couple more days before it released and had another larger than expected move. Looking at the same move over on the Bollinger Band Keltner channel chart. So the gray line came with inside of the Bollinger Bands came inside the Keltner channels. It's really hard to see on this, but and you can see that it just started to squeeze until it finally released, where these gray bars, gray lines exploded outside of the Keltner channels, and you had that giant, massive release, right? This was probably one of Tesla's biggest runs, and it was because it had been consolidating for so long, like 25 days of just consolidation. I mean, there was movement, right? There's movement from 350 to 442. But just because the squeeze is happening doesn't mean that price isn't going to move up and down, and there's no boundaries to where it can move. It just means that those two indicators are doing their job, right? They're doing what they're supposed to do. So this is that move from essentially here to earnings, right? Massive run up into earnings. This was a perfect storm. Like, if I would have known I could go back in time, I would have thrown my life savings into this squeeze release. Massive move. Perfectly coincided with earnings coming up. It went from, the stock doubled. If I remember correctly, one of these moves, I had a 1,000% gainer. I had a 20-cent options contract that went to $11, so $20 to $1,100. Yeah, I have to stay away from those. I start getting too many endorphins going off, and it's like, oh no. All right, let me just get back to, where was that? I've been trying to reorganize my charts and get them a little bit more simplified. Right. All right. So going back to SCCO on the daily. All right. We're not really, see this green. See the dots are green. So we're not really in a squeeze right now, except for on the monthly. Right. The monthly histogram is blue. So the position of the histogram when the squeeze fires is usually the direction in which it will fire. There's a little known study-ish, right? There's this strategy that is called the slingshot. Let's see if I can get it on a better time frame. So the slingshot is when this lower histogram goes from red to yellow, right? From red to yellow, which is, so red is negative and increasing, yellow is neutral and decreasing. So it kind of flips it around, right? This little slingshot, that swoosh, so that when it fires, it's going to fire to the upside. Okay. So we're currently in the negative but decreasing. So this is a consolidation period, right? On the daily, we may need a couple more days for things to really turn around and get going, and for the squeeze to start to align. But we're looking at options 2 weeks out. Once that squeeze fires, we'd like to see it thrust. Like, it doesn't have, the histogram doesn't have to be positive for the squeeze to release to the upside. So here, neutral, or excuse me, mid compression squeeze fired off, right? It fired to the downside. We immediately found support and fired to the upside. However, when this histogram goes from that yellow to light blue, there's usually a large move to the upside. That's going to be seen in this section here. Right. It's this section here. Right. So white, so from green to white, right? And from white up, nice large move. So look, let me get rid of these real quick. Remote drying. Okay. This is a daily. So from an upward, like we came up, we tested the 80 MA. We've got moving averages above us that we need to go up, and price action likes to really be close to those. It's a security blanket, it likes to provide it a support and resistance. So it's going to come up. It's going to test this little cluster area coming in at the 38.2 retracement from this high to this low. Price is retracing back up. If it can get up and close above that 382, then it's a trend reversal, and we can look for a potential pullback for the next move to the upside. Let's see, where was I at? So looking at SCCO on the 15, we have price action just slowly selling off and curving and consolidating, which means that it's just compressing for the last couple of days, up and down and up and down and up and down, letting our moving averages get stacked or to get straightened out. The stacked EMAs are the 8s on top of the 21, on top of the 34, on top of the 50 SMA, which is on top of the 200 SMA. So it's looking at these here, the 8, 21, 34, right? That's a nice strong bullish position, bullish sentiment, uptrend. We've got nice support coming in there. It's layered. The 50 SMA, which is the daily, or the 50 SMA and the 200 SMA, which are the simple moving averages on a larger look back period, those are stacked positive. So this is a nice uptrend, great bullish potential, great support coming up from underneath it. MACD is kind of neutral but increasing, and my RSI signal line has crossed above the upper Bollinger Bands. So it broke above the previous high. It jumped up, got a little bit of air, and now it's coming back down to make sure that it has a support level if it decides it wants to make a run to this 38% retracement. If it can get above and close above 71.69, look for the next $2 move to 73. All right. As far as support resistance goes, let's see. We closed right in the middle of a previous demand zone, so it may consolidate here for a little while to gain more momentum for that move to the upside. Let's see. So the squeeze, the low compression squeeze on the 15-minute time frame is active right now. I should probably put a histogram on here. right? I've got labels. I'm trying to save room on my charts. So this left is the squeeze, right is the histogram. So 15, 20, 30 minute, 60 minute squeeze, all low to mid compression. The histogram is neutral but positive because it's dark blue versus positive and increasing, which is the light blue. So we've got lower time frame squeezes all happening, getting ready to release. When that 4-hour squeeze releases, it's going to fire for the next day or so. So that's the move we're going to try to capture. So in the interim, the 70 to 71 move could be a good trade opportunity. However, the bigger move that we're looking is for the from the 382 up to at least the 618 at 75, and even potentially going to grab those 80s. I don't know if it's going to have enough juice to get from 75 to 80. All right, so I don't know if it's going to have enough juice to get from here to here, unless a higher time frame, like maybe the 2-day squeeze fires off positive. That would give enough upward momentum. All right, that was SCO. Oh, the algorithm. Yes, SCO on the algo. This is the upper left-hand corner. I'm just going to go ahead and make this a single chart layout. So this is a 15-minute algorithm layout. Hold on, I need a drink. And the purple line is just the normal algo. I've got all block trades turned on, looking for a period of at least, looking back. I'm going to look at all of them actually. Looking back in the last 30 days, we did have a block trade coming in at 79.29. I'm just going to go ahead and indicate that with a nice pink color here. So this is just a normal block trade. Seriously? Normal block trade level here. Right. The purple line, which is the algo, has got nice strong bullish, so they're net buying. We had a divergence that began on the 19th, where it gapped down and it continued to sell off. The divergence occurs when price action is heading in the opposite direction of the algorithm. Now all of these little, let's see, we'll go with this color. So since that time, we've had multiple other smaller divergences that have all played out, right? That's this divergence here. We had a divergence that occurred here that's played out, right? Price is going up, the algo is going down. So all of these smaller interim divergences have all played out, right? It gets to be very gritty here when I'm done. But this seems to be a pretty significant level here, right? Uh-oh. I got rid of my algo line. Alright, so arrow, nice uptrend support, right? Minor divergences have pretty much played out. So what we're really looking at is we're looking at this one here. So from this is a divergence that we're looking at. We'd like to see the algo continue to pull price action above previous resistance, so that 74.13, if I were to bring that back over to the chart, right, that's this previous $74.13. So that's this level here. I'm just going to throw a line on here because that's no reason for it to gap down. It just gapped down from this level. So like I said, there's lots of resistance, and you can even see it with the algorithm. lots of resistance, which would be these areas of previous price action, right? How do I do this? So this is going to be our resistance, right? Previous highs from price action. And that coincides with what the chart is showing us. What I'm really interested in is this is that $80 gap fill that needs to occur. Or not $80, $5 gap fill. So from this level to the bottom of this level is about $2. So from how do I keep doing that? It's kind of frustrating. And we'll go with this and this guy and this guy again one more time. Right. So I'm really interested in this level here, beginning where, you know, it sold off. This is a $2 move, right? We get above that, then we start getting into, we'll have to reevaluate. The divergence may play out at this area, but we do, like I said, that that $80 target is well within reach. Looking at it on the 1 minute chart, 1 minute chart's going to be super marked up right now, I bet. Not too bad. So the 1 minute chart, Friday, price action essentially just traded with the algorithm all day. Consolidation up at the 127 of the opening range high-low, right? So we did have a little bit of, excuse me, so when this divergence convened, here, we had a little bit of profit taking, right? The algo is currently pointed downwards, so that is the only thing that's got me a little bit, we've got uptrend support, right? I need this to curl back around and continue up and to really not try to break. Right. Really try not to break this, what was that? A wedge channel, uptrending, what is it? Up wedge, all the technical terms. Yeah, it's it's an upward channel. So I'd like it to reverse close to this point, right? Which would indicate that the intraday algos have started buying again. It can do it. It's done it here, right? It can do these sharp reversals. So I'm not too concerned about it. Especially since price action is going up. Alright, so that's SCO on the 1 minute chart and the 15 minute chart. Alright, the next one I wanted to look at was Airbnb. Alright, Airbnb. We'll just take it from the top. A little bit cleaner chart here. Not a whole lot of data coming through. Wonder if I can get let's see. So I'm trying to show everybody charts that don't require a bunch of paid proprietary tools. I do have discounts for anybody that wants to get a hold of like the Squeeze Pro or the Ready Aim Fire Pro or any of the simpler trading products. I can get a discount. Excuse me. I can get a discount for those. So yeah, I'm trying to find products that indicators that are free, readily available, so that everybody can be on the same same level. Grab the right workspace. Yeah, like this chart is just chock full of paid indicators. It's not going to do anybody any good to have all of them unless I had to go through. Let's go with these guys. Yeah, I like this one. And this bottom B4 indicator is available on Market Extension. I made available in a previous educational video. Looking at Airbnb. All right, so it pretty much reacted the way that I thought it was going to react last week. Nice reversion to the 21 EMA. At that point, we found resistance. We came back down, and we're currently testing previous support or previous resistance of the 8 EMA is now providing support. So looking at this 40, was it 41? I had nice lines drawn on here, but I'll go ahead and redraw them. So this price action, interesting. Price action closed on Friday at the open from when Airbnb first IPO'd. So it IPO'd and opened at 141.20ish. Right, it IPO'd right here. The low of the IPO day was 141.37 and price closed at 140. So that 140 is a pretty significant level. Let me just throw, that's the opening low. This is opening high. There is a strategy. You take the opening low and the opening high and you box it, right? Whatever that move is. So 65, 41, so $15 move, right? So the next $15 move down would be, 121. Makes sense. Next $15 move up would be, what is it, 185 or something like that. So that's opening high. Let me just write this. Edit properties. Just let this be the IPO high. We're going to color that. What color do we want that to be? We want it to be a nice red. I feel like Bob Ross right now. What color do we want? Just put a little trend line in there, and we'll put another little trend line in here, and it's just going to be happy. Right? IPO low. The reason that's important is because those are going to be significant levels throughout the entire life of this stock. So we're just going to remember it. Right? IPO high, IPO low, right? It's interesting that 382 is right near the IPO high based on all-time high to current low. If I were to run a fib from all-time high to all-time low, we don't really have a lot of symmetry with that. We have a little bit. But I'm going to stick with my fibs that I have up. So, last week there was a pretty big move towards the end of the week with Airbnb. It had been consolidating for a couple days. There's no real squeezes to speak of. The green is no squeeze, just neutral, right? However, we finally broke above this downtrend, right? I'll show you that on the algo when we get there. So there's this move here that we were waiting for it to break out of, right? All right, we were waiting for the stock to break out of this little looked like it was a bear flag for a little while, right? And it still very well may be a bear flag, just a reversion to the 34, which is the mean, right? So currently the histogram is neutral and increasing. This volume, this turbo VZO, I'm not super well versed on it. I have to get that better versed on that. It's just neutral. Looking at, then we had a MACD golden cross on the daily coming in on the 25th. That's a nice bullish direction. We finally broke that down uptrend with some momentum, right? We broke above the 80 EMA. We came up and we touched the 21 EMA. Nice slingshot setting up for this neutral but increasing histogram. The problem is we don't have any squeezes. We don't have a day, 2 day, 3 day, none of those. We don't have any squeezes. We've got a weekly squeeze that may fire off, but I mean, imagine how long a stock would have to be consolidating for a weekly squeeze to fire off. Let's look at this guy. All right, there's really no even data. This stock hasn't been alive long enough to really do a complete weekly squeeze. So, looking at the daily, which is really our best source for data on this stock, consolidating, just in a squeeze forever, in a squeeze forever, in a squeeze forever, and that squeeze finally fired off back on the 5th of May. Was May 5th? Yeah, Cinco de Mayo, that squeeze fired off. Since the moving averages were all stacked negatively, and the histogram was negative at the time, basically the direction of the 21 is an indication of which direction the squeeze may fire when it does. So the 21 was pointing downwards on the 5th when that squeeze released here. Right, that squeeze released here on the 5th, and it fired to the downside. It lasted its period of 20 days, right? Let's see. 18 period, right? That daily squeeze releasing lasted 18 days. So we finally came down and we did test previous resistance, or excuse me, previous support. The stock hasn't been really alive long enough to give you definitive channels, right? But we have a low here at 135 that it maintained. It looked like it was going to be fire off again bearishly. However, we did break above. MACD crossed above the signal line. We radiant fire. It gave us a fire signal. I don't know why it's doing this, but it's irritating. I need to fix this real quick. Sorry. I don't like the VZO. I just don't know enough about it. However, I do like my market extension tool. Right, so bearish position. We finally market extension tool reverse. We've got neutral. We don't really have a buy or sell signal. It's just kind of neutral. I'm looking for this to issue a buy signal to the long before I get into a position. So we ran into resistance at the 34. We came back down and we tested, our support at 140. Right, so that 140 is going to be long-term support. We'd like to see this 1, 2, 3 pattern happen, right? So Dow reversal, right? So up, right? And then from there, we want to come back down and test support, which is what we did. And we'd like to make the next move up, right? That 1, 2, 3 ABC pattern. Can I get rid of that? I know there's a way that if I click on a fib level, I can get rid of it. Nope, that doesn't work for that. All right. So we ran into 21, we came back down, we're testing support for the next move up to at least the 34, which is at 153. 150 is going to be a psychological level. It just is for most stocks. It's just, $150 nice whole number. There's this previous doji coming in right at 150, right? This one here. This level here, psychological level. It may come into play, but it doesn't seem like it's been a hard stop before. We can get above the 21 EMA, look for reverse to at least 153 before moving back on to 165, which is the IPO high, which is a 382 retracement of the previous high. Let's say, all right, 145, we're going to have a little bit of resistance come in. Looking at Airbnb on the 15-minute chart. Need more data. More data. All right, so there's that little sloping reverse that we just looked at with SEO. All right, come on. Maybe I got too much data going on there. All right, nice sloping reverse. We broke above the 200 SMA on the 15-minute chart, right? Broke up the 200 SMA on the 15-minute chart. Nice, great move. Nice, large, explosive move up. We ran into resistance right at 145.92, right, which is psychological level and previous high. Right, so this is going to be a pretty significant level here. We've got some shorter term resistance. It's going to be a fight for it to kind of get back up into smooth moving areas. But Airbnb is a fighter, and it's chunky. So we've got a 15 or 30-minute squeeze. Then when that fires, it should fire to the upside, giving us an additional boost upwards, right? So it came up, we sold off to confirm support at 141, 142 area, which is consistent with what I like to see. So yeah, we'd like it to maintain this downtrend support with possible support at 130. If it breaks 138.50, I'm going to look to readjust the position because that means it would have broken below the 8 EMA. So if we're doing the ride the 8 strategy, continue to stay in the stock in the uptrend as long as it's above the 8 EMA. If it closes at least 50% below the 8 EMA, then the trend or the run is over and look to get out or in if you're going short. From the algorithm perspective, Airbnb, massive cluster of block trades coming into support at the 135, 137 level. I want to go ahead and drop this down to the most recent 12-day block trades, right? From the algorithm perspective, we are essentially net buying. This circle is just that consolidation that's occurred for the last week, right? It's just consolidating. We'd like it to break up. Nice uptrend support. We've got block trade supports coming in at 141, 140. Block trade resistance at 144. Let me just draw those on real quick. Beep, 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 beep. It's interesting to see how price action interacts with the block trades, right? This is definitely resistance before it breaks and become support, right? Resistance, we ran into resistance, we're rejected, came back down, found a little bit of minor support there. We've got uptrend support as well as block trend support at 140, right? So that 140 is a pretty significant level for this stock, and that can be seen here, right? Maintain that 140 support for the next move upward. So up, down, right? 1, 2. So this could be a larger 1, 2, 3 Elliott wave. So this would be the one move, come back down for 2 before we enter into the 3. Looking at Airbnb on the 15, or on the 1 minute. Right, Algo is just consolidating all day. Right, there we go. Trading with price action. Currently bearish. However, I believe that once some of these additional divergences play out, we can get a reversal of the 1 minute. I'll get this guy to turn around like it did here. Right, we need this to turn up. Right, similar to that, we've got price action is currently trading with the algo. This divergence here, right, has been played out. This longer term divergence has been played out. We do need this downtrend support, this little wedge that we got going on, falling wedge. We need to break out of that falling wedge and soon. All right, that was Airbnb. All right, HFC, I'm going to burn through these a little faster now. HFC on the daily. We sold off, we came down, we tested a previous demand zone. We loaded up on our stocks, and we've got a squeeze that's firing off. This VZO is going bye-bye. I just can't deal with it. Yes, I've got better studies that I can put on there, and I'm going to put on there. Let's see, market extension. We like the market extension. We also like these CC candles lately. We're going to use those guys. So save this as... Alright, we don't need all this space on the squeeze. Yeah, I'm test driving this CC candles lower study. And I'm seeing how it compares with my market extension study. I really like that one a little bit better. So we'll let you know in the next. That's another free study. So if I do like it, I'll do a video on it and release it with a link to it, where everybody can go pick it up. All right, HFC. So we're selling off. We're selling off. We're selling off. We come down. We test a demand zone. We touch it. We were looking for a reverse to at least the 382, which is at 33.92. I'd like it to get through this cluster of moving averages, break this downtrend, this kind of falling wedge that we've been in, break from 35 to 39 with a stop at 37.50. The stock moves $1.50 a day. This one may need a little bit more time to firm up, but I like the way that it moves. I mean, it's got good movement. Got some downgrades. I mean, this is a good looking technical setup, right? We sell off, we find support, we come up, we break above resistance, sell off, we come down and find support, break up. So I'm looking for it to maintain the 200 simple moving average support coming in at 28.63, which is this level here, right? Right, we've got demand zone support. We'd like it to come back up, break above all of this resistance. Right, we've got uptrend. This could be seen as a potential, just kind of an odd, weird-looking pennant, right? Just a kind of an odd-looking pennant, right? From there to there, right? The reason I like this one so much is, sorry, I need to grab this right here. Grab that guy, this guy. Let me just clear my drawing set. Alright, so I'm going to create some clouds of some trade clouds. So that high, this high, obviously that level is going to be pretty significant. We've got this level here. It's pretty significant. That looks like relatively the same distance. This is the move I'm really interested in. Alright, that's the move I'm really interested in, but to do that we got to get above this previous resistance. Alright, we currently got support, we're right at support. There's a demand zone that we're currently within. We came down and we touched. I gotta find it real quick. Where was it? Where was it? That's it. Alright, that's the demand zone. So a break of that, and we'd play it from 31 to 28.53, which is the 200 SMA on the daily. However, this looks like this doji, right? Spinning top, nice reversal pattern. It may need a day or two to set up. Just because the daily squeeze has not fired yet. Well, it did. So we had a mid compression that fired off to a low compression. I'm waiting for this MACD to cross above the signal line for the next move up. Looking at, Fibonacci. I'm going to go from here to here. That seems to pretty much line up with our moving averages. So look for a reversion to 34.29. At that point, it may retrace a little bit to 33.82 before the next move up. Looking at it on the 15-minute chart, I mean, this is a falling wedge, right? This is definitely a massive falling wedge. However, this looks to be a reversal pattern, right? If we can break up and out of this little cluster, this demand zone, or demand supply zone, we can get above that supply zone and above the SMA, the 33.33. Look for a nice move back up to 37. Right, I like it because it does have weeklies. These weeklies are super cheap. There's a little bit of decent open interest in it, but it moves in 50-cent increments, so that's good for short weeks, right? What I really like about this chart is the algorithm and what the algo is doing. Right, the algo on Friday, essentially trading with price action. All divergences have been played out. The algo is currently curled upwards, which we like to see anytime we're looking for a reversal. Right, we came down and we tested this previous low, but what I want to show you is the 15-minute chart on this. Looks amazing. Simply because look at that massive divergence. All right, we've got a falling wedge that we need to break up and out of before we can make the move back up. If we get above 38 or 34.83, we've got a gap to fill. Don't have really any block trades. Well, okay, so we've got some regular block trades that are older that may come in to provide support resistance, and I'm just going to indicate those guys here. 35.60. Right, where price stopped, 34.92, right, and 34.38. So if we can get above, especially this one right here, so 34.37 to 34.90, that 34.37 to 34.90 is the 382 retracement to the 50% retracement. That's this block, this little cluster right here, or this channel, right? Right, that's 3.8, that's 50%. Let me just throw some text on there. 38.2. All right, 50%, 38.2. Right, that all looks good. The algo's net buying. The algo's slightly curled down, but I'd like to start coloring back up. But this is a strong buying, strong net buying. So look for that to get price action up and out of this falling wedge. It did make a double bottom, so that is a good indication of a reversal, right? Come on. So chop, chop, chop. We came up, we broke above the 80 MA, or the 50 period simple moving average. Now we're using that as support. All right, came back down. Nice double bottom here. This stock is chunky. It moves in chunks. Like I said, we've got that falling wedge we need to break, which is this guy here. Nice uptrend support. So it looks as though it's potentially reversing. Like I said, it's got a little, it's going to have a fight on its hands. But like I said, if it does start moving, it's going to move pretty good. 50-cent increments, pretty liquid, right? Pretty liquid options. That's HFC, my favorite stock. So XPEL. I'm going to move through this one pretty quickly, just because I'm running out of time. All right, XPEL on the algorithm, nice net buying, as can be seen by this long yellow uptrend line. We had bullish divergence occur. The algo is kind of, it's not moving, it's not jagged, which means it's consolidating. We've got long-term uptrend support. We're basically forming this giant flag. Can be seen here. All right. Total little bull flag breakout. Cup handle breakout. Divergence. I like this one. I like this one a lot, by the way. The 1 minute algo, basically trading with price action. Nice chunky moves, right? Yeah, I was trading with price action. Look for it to break and run. See this wedge. So first and foremost, we've got nice strong uptrend support. As can be seen by, I'll use this guy here. And I know it's not the perfect channel, or oh. There we go. Nice uptrend support. We've got this wedge, right? This giant wedge that we're forming. We came up and we tested the 38.2 retracement. We came back down and we found support on our moving averages, right? We'd like this to continue to make some moves, right? A break of the 382 indicates a buy signal for me. So break at 82, 81 and look for a play to 84, then 85 followed by 90. 15, 20, 60, 2-hour squeeze. The 60 is yellow. So neutral and increasing. We've got, all right, we're definitely in an uptrend, right? Uptrend. Look for a little bit of consolidation before the breakout. Stack on the daily, stack positive moving averages, 90% of the 52-week high, positive VWAP, $4 ATR, super positive ADX. We're in an uptrend. We're in a, we're trending bullish. We have a little bit of bearish divergence, which means we may need to come back down and test 81 as support before the next move upwards. Nice market extension, still in a buy position. It's on the daily. Bringing it down to, this should be the 4-hour. Bringing it down to the 4-hour. Just nice strong uptrend, right? A little bit of consolidation, a little flag pennant consolidation there. We've got MACD divergence, right? Yeah, we may need to provide a little bit of support. Lots of wicks here, but I think that the 78, what is that? 78, 75 is support. We can even come down to test the 34 at 75. Before I start getting worried about this. Like this one, look at how well it respects the 200. Like it hasn't broke the 200. So even if we have to, if we start to sell off, we can play the move from 81 down to 71, $10 move down. It could potentially do that this week, which would be healthy for it. So if we fade, we would come down and we would test this level here, right? And this level there. So we're going to come down, we're going to test 78, which is a 21 before the next move up. A break of that and look to test 68, 69. That's XPEL, and the last one is BBY. The reason I like this one from the algorithm perspective is simply that the 15-minute algo, it's very chunky. It's got nice uptrend support. We had a nice move up to previous resistance on Friday. We broke above that previous resistance. The algo's divergence is played out. We're currently in, this is a Wu-Tang pattern, right? We've got the down, up, the Wu-Tang pattern. We came back down, we tested support. Let me get a good color here. We have a block trade coming in at 128.07. That's this level here. Right, that's going to be target. What did I grab the chart for? Uptrend support. Oh, this is what I was going to grab it for. Let's see. Right, a rising wedge is what the algo is doing. W reversal pattern. It can bounce back and forth. This area here, this guy right here, needs to curl back up for the next move up. I like this bullish position. Like it's nice uptrend, good healthy divergence. Let's see, the algo traded with price action on Friday, consolidating. We closed to the opening range low. Looking at BBBY on the daily chart. Nice run up. We tested the 618, so this is no longer a valid Fibonacci level. This is a new run. I'm going to throw on a couple of resistance lines here. We got one there. There's that one. Looks like this might be the most recent one. We're going to use this guy, right? So 121 to 123 is going to be our previous supply zone. It's also going to be our current resistance. We do have nice uptrend support. All right, nice uptrend support. Nice uptrend support. We came back down and we tested the, let's see, so we popped up on earnings, sold off after earnings. We may need to come back down and test this 114.81 level, which is sorry, I'm just trying to find the right level. I think it's this one here, right? There we go. I found it. All right, so this is the demand zone that we're looking at. All right, as long as we can maintain that demand zone of support, we would look for the next move to the upside based on trend. I don't want to chop back and forth, but there's a potential of chopping from 115 to 120. However, that's a $5 move. You can make money off of that, right? Daily, 2-day, 3-day, 4-day, weekly squeeze. The weekly is neutral and increasing. What's going on here? MACD is neutral and increasing with the RSI signal line about to cross up into the lower Bollinger Band. Neutral on our market extension, which means potential consolidation. Look at that nice $7 move at the close. Adjusted price target at 125 at the end of the day. The 4-hour chart looks like consolidation, right? Like I said, they're 115 to 121. Like this may be short intraday where we play the bounce from the demand zone up to the supply zone, right? Which is easily this one here. Just going to do this one, and I'm going to throw in a halfway point here, right? So we could play this move when this squeeze fires off and the market extension tool turns bullish. The 4-hour daily squeeze, when that fires off, look for it to launch it up to from 115 to 121, $5 move, right? It's got weeklies, right? It moves in dollar increments. We can play that $5 move for some pretty good money. $3.30 move, so it's looking to do the 116 to 120, right? So 116 to 120, which is this one here. But still, that's $4, right? For every dollar it moves, we make $100 if we get the right delta, if we get the right strike. I'm gonna go ahead. I like this. I mean, it's pretty liquid options. Good, decent open interest. Those 120s can go from 38 to $1. That's triple your money. I like these 117s though. I like the 117 to 120s. This would definitely be a day trade. Use a cash count. Use paper trading, whatever you need to do. After earnings sell-off, definitely no reason it can't hold this previous demand zone. If we break 112, I'll look to fade this to 109 and lower, but I believe it's going to maintain this 200 SMA support on the 4-hour. Bring it down to the 15. Look at this just giant it moves in chunks throughout the day. So currently we came down, we tested support. We're riding the 80 EMA on the way back up. We broke above the 200 SMA, came back down, tested the 34. From a fib perspective, right? Seems to be pretty in line. Let me just come on. Longer term, right? That 618 smack dab in the middle of our cloud that we're going to target with the 50%. So I may need to adjust the cloud a little bit, but definitely revert to 120. So 116 to 119 or 120. Those 120s are 30 cents. Load up on those guys, dude. Okay. Well, that's it for me. Thanks for joining me. Those of you that did. This was a weekly Watchlist newsletter stream. I did it. Typically, I try to do a video with our weekly watch list. I wasn't able to do it. I spent some time with family. I was able to do it this morning for you. We went over a little bit of, squeeze information. But yeah, thanks for joining me. Oh, by the way, this is a reversal pattern. Red, yellow. One yellow bar, red. Will be next to be red decreasing. Right? Similar to this one right here. Red, 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 yellow, red, yellow. So look for 2 yellow bars for the next move up. This will move, by the way. Thanks for joining me. My name is Dark Pole Algo. Happy Memorial Day. Let's get ready for the week. We have a short week. Don't get caught up in premiums. If you want to just hang out in cash, remember cash is position. And make sure you hit the like button, subscribe, share this content. I'm dropping gems here. I'm dropping buttes, pearls of wisdom here. Success rate's been great. I don't want to go into like, oh, I took, 68 cents to $13, right? 68 to 1300 3 times in a day. Like, I don't do that stuff. I'm not trying to, trying to get people with clickbait. Like, oh, go from, $200 to 20,000. It happens. But most importantly is risk management. Slow, steady moves. Keep your seat at the table. Don't get greedy. Don't get caught up in it. Just play the chart in front of you. And most importantly, have a good day. So, thanks for joining me. Remember, like, subscribe, notifications. Have a good one.